Anything you want me to talk about, have a look at, or you want to discuss, please put it in your question box here. Obviously, remember, if we're looking at charts, put in the time frame that you're interested in. So it's been a busy day today. We've had some really positive PMI data. We had some good retail sales data earlier this morning. So all kicked off with Australian retail sales doing better than expected. Doubled expectations. So it only came in at 1.1%, but it was twice what the market was expecting. So good for the Australian retailer. They're back out in the shops and people hitting those shops again. Later on, we had a big blockbuster retail sales number out of the UK. 9.2% retail sales came in from the UK. Big beat there. Again, twice expectations. It was expected to grow by 4.5%, and it beat significantly at 9.2%. So another big tick in the box for retailers, people, that pent-up demand that everybody's been talking about. Because of the lockdowns, because of people that are still luckily in work or getting furloughed, getting paid by their governments with money in their pockets potentially. So retailers have done okay. Neem, if you want to have a look at what you're saying, gold, yeah, we'll come to gold in a minute. Gold's on a really good run. Some key levels I've been talking about all week, and we'll come to that in a minute. Say the PMIs, the services and the manufacturing PMIs are quite good out of the UK and Europe earlier today. Later on, in about an hour and a half, we've got the US initial PMIs, and they're expected manufacturing to come in around 60 and services to come in around 64. Remember the thing about PMIs, the Purchasing Managers Index, they're significant simply because there's a very key pivot point. 50 is the key pivot point. Anything under 50 is a contracting sector. Anything over 50 is an expanding sector. So services, which accounts for the most part of developed economies, looking at 64 for services out of the US later on. So see how that comes in later. EU consumer confidence as well might tick up, still negative, -7, but see how that comes in. And then we've got existing home sales, 6.09 million expect for existing home sales out of the US later on as well. So, right, everybody's coming in. So let's have a look at the charts. Let's get rid of my ugly mug. Actually, let's not get rid of me altogether. Let's just move me down there and get the gold chart up. So this is I've just loaded this MT5 platform here. So just bear with me a sec. There's some new charts in here. So there's charts we haven't looked at before. I may need to set them up. But gold. Where's my gold chart? Dear me, where's it gone? Gold, there it is. So gold, let me just start at the weekly chart here, Neem, and let me show you these key levels I'm talking about. This here, 1875, you can see that on there, 1875, a key weekly channel here, 1875 and then 1904 on this. This is the weekly chart, so you can see what a strong couple of weeks gold has had. And as we've said before, it's had a good April and into May as well. So here we breached this 20-day moving average here. This is the purple line here is actually the 21 EMA on here. And we had a good April, but we've had a particularly strong May, haven't we? So we're over this 1875. Interestingly, see, this is the hour day candle. We opened up over 1875. So absolutely key, that 1875 level. As you can see, we tested it 1, 2, 3 days, sort of closed into it yesterday. So strong level. That's the one to watch, Neem, going forward. So what's your other question here? When break down gold, can I take it as a sell? Well, as a trend following trader, as a trend following investor, this is, trending higher. Simply on this is the end of day. So we've got the 21, the 9 and the 5 exponential moving averages, all trending higher. So that's a positive market. If it rolls over, obviously retraces through the 9, this strategy says to cut your losses if it closes under the 9 period EMA, not just touch it if it closes under it. At the moment, if you're trailing your stop loss up, your stop loss, 3-5 candles behind, your lowest low point, for instance, is down here at sort of 1855, 1851. If you were 3 candles behind, if you're 5 candles behind, a bit more conservative, it's down there at 1845 as you've been moving up. So gold remains bid to the upside. For it to roll over, Nim, is what he's talking about. It needs to reject this 75 level, but at the moment, it's had a good day yesterday. It's having a good day today. At the moment, we're at 1883. So anywhere that closes in here is quite significant. As you can see, when we started this down move here back in January, it all kicked off with a huge candle. Remember what we say about candles: the size and the body of the candle is absolutely fundamental. It means probably more movement in that direction. So we had a big move candle down. Obviously, we had a selling exhaustion all the way up here right at the beginning of the year, and then we've trended lower. We had a bottom here at around 1685, rallied up, retraced back down to that 1685, and then we've moved up through April and May, as I've just been discussing. But as you can see, the steepness of the rally here for May is much steeper than it was in April. So again, that might be two ways of viewing that. That looks relatively positive. And again, just look at the size of the candles. But if the angle gets too steep, that's when you might start questioning. But at the moment, 1875 was probably a target area for lots of people. So off it's gone and it's going up. So watch more and grow more knowledge. Absolutely. So there we go. Gold on the daily time frame remains bid. So let's come down the time frames. Nobody's asked about a particular time frame. So 4 hour remains bid again, but as you can see here, the moving averages are flattening out, and we've got some big candles here again on the 4 hour time frame. MACD started to, interestingly started to diverge a wee bit there. Can you see that on the MACD? The signal line started to move down. Prices are still moving up, so that might be a bit of a question mark. RSI on the 14 here did trip into oversold zone, but it's still got some upside. So certainly intraday, it's a strong day today, and we're currently in a strong hour. So we've been playing with the 1785 level, and this may be again the exhaustion just ahead of the US Open, but that's the level to look at, isn't it? Here on intraday basis, is this level here going back to Wednesday when we topped out at 1890. So that's the weekly high here at 1890. So are we going to test that for the rest of the day? Too early to tell, but a big strong candle in this current hour. But we can't do anything about that as an end of hour trader, because that candle isn't complete. If you're a end of 30-minute trader, that candle is just completing now. So that's looking relatively positive as well. 15-minute guys would have already had this big spiky. So it's literally in the last 15 minutes. You can see it's still trending up. Broken the high from yesterday, this high area into the close yesterday, and bid on gold there. Maybe some data come out weak on the dollar, but certainly gold's having a bid there on that 15-minute time frame. So let me just reel that down. Let's have a look. Let me have a look what's going on in our Facebook pages, because all our questions so far are from I can't see anything. Let's try and refresh that. From you YouTubers, is that what you call yourself? You YouTubers, I think it is, isn't it? Yeah. Okay. Cliff, hello, good afternoon. Hope you're well. I had a sell position. Okay, well, you might be getting squeezed there on that. I don't know where you got in, where you got out, but you may be getting squeezed there on gold. This is the 1 hour. It's moving up. I don't know where you are on that. Key. Okay, good afternoon. How long I can hold without selling a point? I don't know what you mean, Kay. Any type of trading needs to be relative to your personality, really. So if you're a scalper, you're in and out in a matter of seconds, or less than a few seconds. If you're a long-term trader, you might hold things for a few days, a few weeks, a few months even. Investors hold things sometimes forever. Remember, the ultimate long-term investor, Warren Buffett, talks about holding his favorite holding time is forever. So it's all about relative times, Kay. So I can't really answer that question for you. Shail, good afternoon, or good evening, good morning. I don't know where you all are, but Kay, It's really to do with how long you want to hold on for things. So, as far as data is concerned, we've got, as I said earlier, we've got Canadian retail sales due currently. Let's have a look if that's already out. CAD sales just coming across the terminal here now. Headline was 2.3% down from the 4.8% last time. It's not fed through this term. This term was really slow today for some reason. It might be out on some other terminals. Indeed, it is. So, 4.3%. So, just like the Aussie retail sales, just like the UK retail sales earlier today, Canada follows suit as well, and it comes in double expectations. Expected to come in at 2.2%. Retailers are back, consumers are back, clearly in these three key countries. And the headline Canadian retail sales ex-autos has come in at 4.3% compared to 2.2%. And the big headline, the headline month-on-month for March is coming in at 3.6%. Not quite as the aggressive move taking out cars. So suggests the cars haven't flew out. The second-hand cars market hasn't perhaps picked up as much as in the United States, coming at 3.6%. But that's still significantly better than expectations. Both down on last month when we had a big blockbuster month for retail sales in Canada when they were 4.8%, but certainly better than expected, significantly better than expected. We'd see a bit of a bid on the Canadian dollar, one would expect. So let's have a look at the CAD. Yeah, here we are. We spiked down on that news. In fact, we spiked back up, haven't we? Let's have a look. 5 minutes. We moved down and then we've moved back up. So 120.15, still very, very weak. Canadian dollar here earlier. Let's put that in. Touched 120.28, so it's perhaps not as low as it's been, but certainly this is the daily time frame. You can see that's a blue line where we are today. Earlier in the week, we went down to here to 120.12. So dollar CAD very much, as you can see on this end of day chart, very much a big trending lower, pushing these new 3-year lows here for the dollar CAD as oil had a really good run. Now then, let me see if I can see any Facebook questions. 55 people were reached. Nobody's actually asking a question. Archie's asking here on Facebook. So I'm just going to Facebook my YouTube colleague. So, good day. What's your take on euro dollar? Well, it's euro, Archie, remains bid. This is the euro on the 1 hour time frame. Strong bid yesterday. Nice move up today. And what we've had is a big shanking candle down here on the 1 hour. So we've moved down significantly over 122. So what does that tell me? Well, some things happened. It could have been Mrs. Lagarde's speech. She had lots of speeches this day, but that's not such. Look at the side of the candle. It's not that unusual. It does happen. This time it was into the close last night, 9 till 10. It's happened here 2 till 3. So the candle closed half an hour ago. It's a significant sell-off. But again, this strategy had slipped under the 20-hour moving average. It flattened out here at 120.64. So we couldn't get, 122.36. Couldn't get to the weekly high there at 122.45. So that's moved down here in this hour. But 122 is still relatively elevated for the euro against the dollar. So here on the daily time frame, you can see we're struggling to hold 122. So you can see it's at relative highs. This is the daily, remember. Archie, again, I don't know what time frame we're trading, but, strong day here. Tuesday, Wednesday we were down. Thursday we were up. Friday we're currently down. So looks like we're running out of steam. The end of day hasn't been able to close over 122.25. So that's your key, 122.28, but 122.25 is your key line in the sand. And look where that corresponds to. It corresponds all the way back here to the end of February, where we spiked intraday to 122.45, which is what we did again on Wednesday. We haven't been able to hold that level. And in February, the close was lower than we've been at the moment. So on an end of day basis, our high close was 121.71. So comparing May to February, euro dollar is actually better off because we're back over 122, but 122 remains key, Archie. And I don't know what sort of time frame you're trading this on. And the Facebook questions, unfortunately, don't update automatically like they're doing on YouTube. So let me have a look at this. There's no more comments. Archie, I hope that's answered your question, my friend. Lots more questions over here on. Hang on a minute. There we go. Archie, there we are. You're on Facebook. Oh, they're all coming through. Right. We've had some sort of update. But I'm getting Facebook and YouTube questions here all at the same time, so that's good. So Archie, there we go. There's Euro 122 is that key line in the sand. Again, this is the 21, 9 and 5 EMA trending higher. It's retraced, but doesn't seem to want to go down. So the low of these three candles was there, 121.50, and that's a big round number as well. So 121.50 is your support, or 121.47. You want to be accurate. 122, and we need to close over 122.28 really if this is going to move higher. Archie, if you want more details on a particular time frame, please let me know. Okay, so I'm holding sell maybe for a few days until I get profit. Is that possible? I'm not quite sure. Okay, you're talking about gold. Well, as I said before, on the daily time frame, okay, again, it's you guys. When you're trading, you need to understand what sort of trader you are, and fundamentally, that means understand what sort of person you are. So, are you a trend-following trader? Okay, it sounds like you are if you've held it for a few days. So, you should have a relatively big stop loss. Again, if you're a trend-following trader, gold's a classic example. It's been trending up really nicely. So, you'll be trailing. Lots and lots of different ways to put your stop loss on. You can use the moving averages. You can use a trailing stop. You can count the candles back, however you want to do it. But the trend is very much in play, isn't it? We rallied up. We consolidated into the end of March, end of April, I should say. Big, strong candle at the start of May, and we continue to rally and we continue to move up. Again, this 21 EMA or the 21 or the midline of the Bollinger Band, if you put Bollinger Bands on here, you see, has provided really good support for the gold market through April and into May. So obviously we're extended from that now. We're probably a longest. 40, 70, quite a significant extension from the 20 period movement average, to hanging it out. But we're moving. So as I say, if we hold above this 1875 key area, Friday's a key as well, but not big candles. See, the bigger candles were down here as we were moving down. So we haven't really had some big knockout candles moving up. Some steady ones, but not some big ones. But that is trending higher. So, Kay, I don't know where you are with regard to your stop loss, with regard to your margin, with regard to all that sort of thing, what leverage you have on your account, all that sort of good stuff. But at the moment, that's trending high. There may be a retrace. Interestingly, this week, if you look at the candle here, this has really got, I think, when I was speaking to the guys in the office earlier in the week, this was a really, interesting candle. Big doji, wick to the north, wick to the south, open and closed very, very close to each other. Typical indecision. Where we were going, we tested higher yesterday and broke into 1875. It may be a false move at the moment, but at the moment, that was just a pause in this move up. So, 18, 19, next line in the sand on the upside. So that's for gold. Naomi, hi. In a buy for euro, what is your suggestion? Well, again, I can't tell you what to do, guys. You should have a system and a strategy that would keep you, the right side of any particular move, whether it's a trending move, whether it's an oscillating move. Again, lots of Facebook question. Let's just get rid of that one. And then get rid of that. Right, where are we? So, time frames, Naomi. Let's say for the hour, you would have been long yesterday, long most this morning, but that's turned short here at 10 o'clock. Spiked a bit high, so you might have been stopped out, depending on how close your stop loss was, but really the turn in the market is up there at 122.39, and that's significantly short now, intraday. Big move, bit of a retrace of the move. So, the low from yesterday would take you all the way down to 121.68. The low from Wednesday was a tad lower at 121.58. So are we going to test yesterday's low? Well, we're not that we spiked down, now it's moved back up, but this looks like it's rolled over on the 1 hour time frame. As we did earlier, Naomi, you would have seen the 30 minute would have moved quicker, and the 15 minute would also have rolled over but that would have stopped you out. But then you would have gone short again here on the 15-minute, and that's continuing to move down. Looks like it may have found a floor, but 122 is key, Naomi. So again, it's all to do with how you trade it. Obviously, if you're an oscillating trader, it looks a lot different. Okay. Which trade line is the best, and can you explain the difference between 30-minute H1 and H4? I guess that means it's all about time frames, Kay. Watch my, I go clearly into trading time frames, trading multiple time frames in our webinar series. So I'm not going to talk about that today live, but, firstly, before you do any of that, Kay, find out what sort of person you are, it's all about understanding yourself. And this business is a psychological business. It's not, listening to old guys like me prattle on about cables and moving averages and candle patterns and everything. It's about understanding yourself. It's a big psychological business, this. So you've got to be able to understand yourself from a risk profile point of view. Sounds complicated, but it's not. It's just, how much risk can you take? How much risk do you normally take in your life? So let me just put that up for a minute. So it's all about that. So the difference is the thing you're talking about here, Kay, is really a time frame. So M3 means 30 minutes. So for every M30 or every M15, obviously we've got here. Let me just move me down again. This is the M15. So for every 1 hour candle, there'll be 4 of these candles. So this is the M15 chart. The M30 looks similar, but has got less candle, covered that distance in less candles. So these 2 candles here will form the H1 candle that's currently forming. Does that make sense? So this candle here was the 30-minute from 3 o'clock or 3 o'clock server time to 3:30 server time. And this candle here that's forming at the moment on the 30-minute time frame is the 3:30 to 4 o'clock time frame. So if we go to the next time frame, the 1 hour, you will see there it is. Those 2 candles are within this candle here, this one that's formed, whereas the previous hour did all of this. That huge move down. That's what the difference means. Okay, you really do need to understand these basics of chart setup and candle patterns, but more importantly, as I say, understand yourself first. But then after that, before you get to the charts and the candle patterns, understand about leverage and margin and spread and all those sort of things, and what CFDs are before you risk any of your own real money, because trading on CFDs and forex trading is a risky approach. And Kate, to finish your question, 4 hour, what do you think 4 hour is? Well, 4 hour is just that. For each candle, it means H4, 4 hours. So 4 hour trader here, this is the candle that's forming from 12 o'clock today. So all that action we've just seen in all those other candles is all included. When I say action, I mean the highest price and the lowest price of the last 4 hours, or the last 3 hours and 45 minutes so far, is down there and up there. So if you trade the 4 hour candle, you don't do anything until it's completed. So you might have done something at 12 o'clock, you come back at 4 o'clock and see, has anything changed? Well, we shall see when this candle completes. If this candle here, for instance, on 4 hour trades breaks under this purple line, it looks like it's going to go short, just like it did yesterday, or on the 19th. When was that? Yeah, yesterday. Not yesterday, Wednesday. But it didn't, did it? Actually moved up immediately, and so that short that you'd gone there would have stopped you out there as it's gone back up, or you would have closed it and gone long to there. But anyway, that's trading the strategies, but that's all it means, Kate. It's as simple as that. Okay, so don't overcomplicate things, my friend. Good. Okay, Kate, that's fine. We've all got to start somewhere, and I'm always learning as well. So don't apologise for anything. Get to our website. Get to the education page. If you're not comfortable, don't risk any of your real money at all. Start with a demo account, but principally, you've got to understand yourself first more than anything. Have a look on the education page, look at the videos, look at the ebooks, do the video course, and contact me, contact us. We're all here to help. Okay, I hope you can. Right. Alicia's got some. So you're selling at 1887. And stop loss 1902, and take profit at 1880. So $7 is our first profit target there for Alicia. I don't know what time frame is that, my friend. you're trading gold on. We'll see how that pans out for you. Certainly, day traders are still long, so you're against the daily time frame. Alicia, you might be just doing it for a few hours. 4 hours still long because it's up. 30 minutes, yeah, that's still bid as well. I don't know, a 5-minute trader. Oh, might have run out of steam. Might be right there. This is gold on the 5 minutes. 18. What do you say? 1887. Yeah, maybe. It's run out of puff a bit, but this is 5 minutes, guys. Remember, we've had 1, 2, 3, 4, 5 big move in the last 4 5s, 25 minutes. Run out a bit of steam a wee bit. So, but that's a definite breakout. I had to get long, and it's obviously hit a level. I haven't got the pivot points and the R1 or S1 levels on here, but we may have ran to that. Yeah, best of luck, Alicia. Let me know how you get on with it. Johnny, hello. Hope you're all well and staying safe in sunny Vietnam. Right, have we dried up with questions? I think we may have done. Where was that? 44. So that was only a couple of minutes ago. Alicia, tell me, what time frame are you trading at? Are you a scalper? You're in and out. You've got 4 targets there. $7, $6. Another. Interesting. Your targets are set at fixed levels there. Again, it'd be interesting to see what your approach is, my friend. Are you in the 5-minute trades? Let me know. Excuse me a minute. So let's go back to CAD because that was positive Canadian data along with the Australian data, and it's continuing to unwind. That's the daily. The 1 hour's moved down again, spiky there at that 120.28. So again, dollar CAD moving down. So it's all pressure remains on the dollar. We had the pickup in the dollar earlier in the week when we got that news from the minutes from the Fed that there was much more clearly from the minutes. There was much more chatter about the talk of tapering, i.e., taking the foot off the foot off the accommodative pedal as far as pumping money into the US economy from the Fed is concerned, but it didn't last very long. We, as you can see here quite clearly on the CAD's been obviously twisted by the movement in the oil prices. Well, I'll come to oil in a minute if anyone wants to talk about oil. Lots going on in the oil market. But the dollar itself, the greenback rallied here from these lows, as I said earlier, at 120.12 all the way to 120.140 zone during Tuesday and Wednesday when when the Fed numbers came out, and then we've moved down Thursday and down again Friday. So the big lift we had from the Fed minutes has taken its foot off. So, Musi, hello, my friend. Hope you're well. May I have your view on NASDAQ and the USA in half 1 hour time? There we go. Point me in the direction. Right, so this is the USA 30 on the daily. So it's still bid, it's still up, and it's chopping around. It perhaps looks like it may have run out of steam, possibly. Maybe a bit too early to tell, but you can see some sort of resistance lines there. Whoops. So we got an intraday high of 35,100. We closed the high here on these charts here at 34,815 for the sake of a 5. Moved down. Got a bit of a not sort of great trend line. It's not touching, but there's a bit of a trend line. You could say there's a trend line here on the wicks at the moment. So we've got a bit of a triangle forming here. So we might break out in either direction at the moment. But certainly, line in the sand, we're currently trading at 34,250. This is the USA on the day. So it's sort of chopping around. Let's go down to your time frame, which is the 1 hour time frame. So daily, still relatively well bid, but sort of you can see how the moving averages have rallied up and we've flattened out. So we're flat here through from about the 12th of May. This big sell-off, didn't want to go lower. The low here, let's zoom this up, see. So that low was lower than that low, okay? That high was a bit higher than that high. So we're biased to the upside. See what's happened there? That low was obviously above that low. So you can see that this consolidation is waiting to break out, having rallied up nicely, consolidated, rallied up nicely, moved back down, retraced, and it's just finding its direction now. Where are we going to go from here? Earnings season is coming to an end. They've all been very good. And as the USA 530 has benefited quite well, the Dow, simply because there's lots of, cyclical companies in there, energy companies in there, big industrial companies. That's what the USA 30 is, the Dow Jones Industrial Companies. They're the ones that are likely to benefit if this big infrastructure plan and spending comes forward in the second half of 2021. So at the moment, that's breaking out on the daily. So it's not clear what's going on the daily. For your time frame, Muzi, it was bid yesterday. It rallied up, moved back. See, that's the daily. It's today that remains bid. It's gone over our daily triangle. We just assume that it's gone through that, hasn't it, today so far? So that's over that. And again, the 1 hour strategy here would have gone long yesterday and kept you long, basically, because we haven't closed. It's really good here. If you're using the midline here to trail your stop loss here, you're still in this one because we haven't closed underneath it. We're still in it. So that remains long. So the 1 hour there, Muzi, remains to the upside. The 4 hours probably a bit more clear. Well, not really. It's sort of starting to break out. So it's perhaps early days to break out. And I just drew that very roughly, that trend line. But you see it fits quite nicely on the 4 hour there. But so yeah, it's biased to the upside. One would assume Nasdaq's doing the same, but they're disconnected yesterday. The Dow was might be playing catch up now. The Nasdaq was up 1.77% yesterday, whereas the Dow only moved about 0.58 of 1%, whereas the S&P was up a whole 1% yesterday. So the Nasdaq may be playing catch up. I've got the Nasdaq here. I think I did. I'm sure I have. So look, that's not USA 100, yeah. So USA 100, similar sort of pattern as you can see, but flattened out. So again, another one rallied out. Another trigger to go long was there yesterday, and it's a strong close here. Closed over that. Let's see that breakout there. Closed over that congestion it had been in it earlier in the day. Strong close to the day for the Nasdaq. Up here to 13,500. So again, stalling at a round number. But again, if we go up the time frames, 4 hour, again, bid at the same hour actually here. That's gone long there. That's still long. Struggling around here because it's a big round number, 13,500. But you can see the next level here, next 4 hour candle took us up to there. So 13,670 would be your next sort of target level for 4 hour traders. And the end of day, so we're going up time frames here, very, shook out really aggressively in May so far. It was just about yesterday was the first time we closed back over the 20-day moving average, or the 21 EMA as it is here, for the first time in, so look, it's quite a while, isn't it? So Nasdaq's been weak, and that's all to do with the churn out of technology stocks into these energies, into the cyclical type stocks. So yesterday was the first day we closed over the 20 in 9 trading days, and that last time was very weak, wasn't it? And it's continued to move down. So see what happens today. But this week, you'd want to, that's our intraday low, took us down there to 12,950. So you'd like to hold certainly 13,500 would be great for Nasdaq, and then that 13,670. I don't know where that was. That come from? Was that come from that last time we were over here? Yeah. So day maybe showing up, and that's why the 1 hour may be leading it, but it's also a reason why the 1 hour may be running out of steam as well. Remember, these are the futures prices. The cash market doesn't open for another 40 minutes, so have a look at that, Muzi, my friend. Sorry, there's lots of other questions coming in here. Alicia, I've just took 3 trades, and I think I'm going to make profits. Okay, very good, my friend. Oh, you short, guys. So I wanted to start with a small amount of money, and is that important to have a stop limit? Okay, you've got to be very, very careful. You've got to understand that, leverage on your account, understand lot size in particular, and understand, how much of margin will be taken on each particular account. I can't tell you what to do. I can't tell you how much to invest on that invest. But what I can say is, don't invest more money than you can afford to lose. Think of it like that. Think about all the professional traders, all the traders that have been trading a long time, investors that have been investing a long time, always focus on risk management. They always focus on how much money I'm prepared to lose if this trade goes wrong. Okay, and they get out when it goes wrong, and they've lost the X percent or X amount of dollars, or depends how you want to trade. It's all to do with your time frames and your risk profile. You know, don't set a fixed amount, don't set a fixed percentage. If you're in a very, very volatile market, but if you are in a very, very volatile market and that's as much as you want to lose, that's fine. Keep it like that, friend. So we'll come back to that gold short in a minute. Okay. I hope that answers your question. Hi. Muzi, right, we just done that, Muzi. Sorry, unless you put that in twice. Oh, you did put it in twice. Holding a buy on gold from 1878, but at break even now, says Lawrence Fox. Lawrence, again, I don't know where you got in or where you want to get out. As I've just said to Kay, again, most traders worth their salt know where they're going to get out before they get in. They want to make X, or they're a long-term trend and they're expecting it to keep going up and they just keep adding to their position, expecting it to retrace a bit, move their stop loss trade. It's all about your perception. Lawrence, I don't know when you got in at that price, what your expectations are, what time frame you're trading, what sort of spread you've got. But at the moment, we're still moving up. 1887 here. This is the gold on the 5-minute chart. Again, with this strategy, it wasn't doing anything all day. Well, not all day. It wasn't doing anything here. We've broken out. Look, that's a really strong candle. Big positive white candle. Having had these wicks to the north here, it got higher. That wasn't as high as that. But that was suggesting weakness. You could argue that was weakness. If that was the end of a downtrend or top of an uptrend, that is weakness. That's a shooting star candle. But when we're going sideways, it still looks like a shooting star candle, but it doesn't really count. It could have been signifying a move down. As it is, it's moved up. 1887, it was still sort of pushing higher there on gold. So there we go. The messages, as usual, sort of come in fits and starts. They rush in and then they all dry up. So where was I? CAD. Aussie at 77.75. This is Aussie on the 1 hour time frame. Needs to break where it is now, really. That's been a bit choppy, hasn't it, today? 78.78, not too far away. See what comes in. So CAD sales, let me just make a quick note of this for myself for later. CAD sales were positive, weren't they? So what is it? We're not 4 o'clock yet. So 45 minutes to the US PMI. So we might get a bit of quietness on the dollar. We shall see. Nobody's asked about oil, but let me talk through oil. We've had a very actually, let's go to the daily. We've had a strong negative, if that makes sense. We've had quite a significant negative week for oil at the moment. 3 big down days, Tuesday, Wednesday, and yesterday, Thursday. All started with gossip that sanctions on Iran may be coming to an end. They're back on the table. So here, this is the daily time frame for the US oil spot market. So 3 significant down candles here. This is white for down, black for up here on this particular chart setup. So down through 65, down through 63. We went as low as 61.50 yesterday, and we closed at the low. See how little that wick is? We closed at the low. So again, that was suggesting perhaps more. We've bounced off that a bit, so it's 63. But oil remains in the higher time frame. That is the higher time frame. If we zoom in, you can see this is the end of day. It's had a really good run, hasn't it? This is oil from the depths here in October. Big, strong run into the spring, and then we've sort of gone sideways. We can't get to that $68 level. 65 was sort of where we were pivoting through for May, and we've given up the ghost a bit, haven't we? So you can see this last channel here, this last up leg, is sort of broken with the fundamental news, and that's quite often what happens with oil. Took to yesterday, so we need to get back into that channel if we're going to move back up. So let's see what happens today. Let me zoom that up. So there we go. So strong. A strong rally earlier in the year. We got to this 67, 96 within 4 cents of $68. Shook down in March, recovered in April, but interestingly didn't recover back to that test the 68 level in our May high. So our May high took us over 66, didn't really get us to 67 for any length of time, and now we're back down under 65, under 63. And so, maybe breaking out to the downside. And the next, obviously, the low key level was at 57.25 that we had in March. So we'll see if that transpires, or this is just a pop out of a few candles. Significant, the news from Iran may not be all that continue to actually come to fruition, but let's say we shall see. So let's have a look, Alicia. Short gold, stop loss at 1920. See how that goes. Where's am I? No more questions going in here. Okay, I don't know if anybody come back in. But Lawrence, with your gold trade, let's have a look. Where are you? Gold? Where's gold gone? We're still hanging in there. 1886. It's sort of ran out of steam, hasn't it? It's 5-minute chart. 15 minutes chart with a doji in the last candle. So 2 kick-off candle breaking out of where we were earlier today, lunchtime. Strong 2 candles. Now we're running out of steam a wee bit, but still sort of pushing higher. Again, 1 hour, big strong hour we've just completed. This hour less so. Oh, sorry, the hour we've completed, and obviously we're just into the next hour now. It's just rolled over into the next hour, so that one may have attracted end of hour traders, but that's our resistance there. 1890 really is that spike there, and it's still ticking up on the upside. So there we go. No more questions coming in. I've bored you all silly. So look, let's refresh Facebook questions. Okay, no, there's no more Facebook questions there, so let's go back to my settings. So let's have a quick run through. Surprisingly, nobody's asked about Bitcoin. What a week Bitcoin's had. All the way down to 30,000. For what it's worth, let me just put my penneth worth on the Bitcoin story. Really, obviously, a lot of attraction, or a lot of attention, I should say, goes towards big Bitcoin fans like Elon Musk, like Kathy from the ARK ETF. But really, the main news, which sort of got lost a bit in tweets, in Musk's tweets, is this cranking up of the regulation in China. The financial sector there, the financial institutions there, being restricted to what they can do with cryptos. So we had this big shakeout, 54% fall from our high here at 64,800 all the way down to 30,000. A huge retrace, but obviously Fibonacci traders are all having a look at that. So latest Fibonacci levels from that big shakeout from the all-time high. If you're looking at it technically, will take us to the 68. The key golden ratio will take us to 51,700. Doesn't seem that far away, does it? But that's where to shake out the all-time high to this recent low needs to retrace to look for the next leg up. It can move very, very quickly, obviously, cryptos. But some lines in the sand there. Obviously, psychologically, 50,000 is a key level, and it's it shook out more than this, but a 54% fall from highs within a space of relatively few trading days makes this a very volatile asset. Which again, those that are criticising cryptos and the future of cryptos and all the rest of it, using this as a stick to bat it with. but certainly it's had a really good year. This is down back in January. We're all the way back to these January lows at 30,000. But January, February, March, April, doubling your money, and a space of less than a month, it all disappearing. Okay, Alicia, hello. Interesting. That's proper analysis. We'll have to talk more, Alicia. I'll put that up in a minute. Suma, we've got another request here. Suma, gold oversold, overbought on daily RSI. Why is it not going down? Just because a indicator says it's overbought or oversold doesn't mean it's going to follow suit. Remember, indicators are just that, Shubhan. That's all they are. They're indicators of that. Let me have a look at what you're talking about. Let's have a look. So gold on the daily, you said, didn't you? So gold on the daily. I've only got MACD and RSI on here. So yeah, RSI here on the default setting 14. It is into the overbought area. You're right. 74 point. What's it trading at the moment? 74 something, isn't it? 74.50. So yes, it's in the overbought area on the daily RSI. Why is it not going? Because it hasn't gone down. Because it goes up. It can go up and it continue to go up. Here we are, 1890. So we've hit our first target to the upside here, or the first resistance area from earlier in the week. So 1890 gold trades at, and it's trending higher. It's just moved into that zone. And again, if you had your, let me just, it depends on the setting. That's the default setting, 14. So it's just pushed into the oversold zone. So it may be a suggestion that it's getting overbought. You're right. You're absolutely right. Schubert, but if I go back to this weekly time frame, you can see that a bit more clearly. You can see why 1875 was such a key level, because it was this intra-week peaks, these daily highs that we got to here back in January. So this is, we're playing with 2021 highs here. Obviously, we had that massive week at the beginning of the year. But yeah, 1875, and that's, for me, on the weekly, this is the end of week candle, remember. 1904 is the next target to the upside. But you can see 3 strong weeks so far for gold without a retrace. So it has been playing catch up. The dollar had a spike of weakness this week. Remember, gold gets 2 bids. It gets a bid on inflation risk coming back, a view of inflation. That's what everybody's been sort of kicking around. And also, obviously, a weaker dollar, as it affects all the commodities and the commodity currencies. But gold took a while, as we saw in the daily time frame, to catch up. So with some of the faster moving commodities like copper and palladium and platinum and what have you. But certainly it remains bid as an end of day trade. I'm not bothered about, you wouldn't be bothered about that. We tested 1890. We're back to 1886 now intraday. But that's still, strong candle. Maybe the up the high for the day. Who knows yet? We can't really say. So Alicia's got some analysis here for us. In reply to Archie Masuri, Euro remains sidelined around multi-day highs above 122. Yep, we said that. US dollar consolidates recent losses and a small pickup in yields. Markets remain indecisive after US job claims propelled risk on mood. Euros. I don't know if you're writing that yourself, Alicia. It's very good if you are. If you're copying from somewhere else, all well and good as well. I can't read all of that. Scroll down. I can't show you it all for some reason. Let me just read it out. Everything Alicia's wrote there, she's wrote or copied it from somewhere. I don't know. If you've written it yourself, well done. While the bullish MACD and sustained recovery from earlier months tops to cross the 22.45, that's what we talked about as well, key level. Immediate hurdle, the resistance line of a 2-month-old rising wedge bearish formation around 122.26 to 70 will test the pairs further upside. Alternatively, could drag the quote at the spot line starting at 121.50. Yeah, possibly. Alicia, very good. All the very best to you. Want to participate? Please participate. Don't try and just come and pitch your trading ideas, but that's what it's here for. Ramaz, good day, sir. Isn't it going to go up to combat inflation? Yes, but the argument over, that's the traditional view. The argument is, as the Fed and the other central banks keep saying, is that the inflation is only transitory. But we will see what actually pans out. But as a trend following trader, let me just repeat this: as a trend following trader or investor, we've been rallying quite nicely. So 2000 is a big round number. 1900 is obviously another big round number. And can we get there? Well, we don't know. But again, it's all about your time frames. It's all about how long you're in a trade for. Are you a swing trader? Are you a scalper? Are you a long-term investor? But certainly, on an end of day basis, let's just take the average end of day basis, that is continuing to track up, and there's no suggestion that that's running out of steam at the moment. So there's clearly buyers for gold today, Friday. Alicia may win that trade. She may be right in that trade. Who knows? I mean, that's what trading's about. It's all about opinions, isn't it? Some people buy something, and some people will sell something at exactly the same price. One expects it to go up, one expects it to go down. That's all trading is, and that's all brokers do. They bring together these two different belief patterns, strategies, systems, whatever it is, and make the deal. And that's what markets are: pure, supply and demand. Demand driving things up, supply capping that demand and rising up. But technically, again, up. But you're right; it is in the overbought area. But it's been testing that. If we zoom that up, it's been testing its oversold area for a while. Overbought, but it keeps going up. So things can remain. The old adage: things can remain overbought a lot longer than perhaps you can remain liquid in the market. So always trade. Don't over risk things. Don't have too much open positions on the market. And see what happens. See where we go from there. But thanks for your input, Alicia. You're right. We'll see what happens as far as euro is concerned. I've lost it now. Again, sort of petering out in the 4 hour. Again, those areas are quite a way away. 1 hour, the areas you talk about. There we go. We've been down to test what we've been tested today, 121.77. So see where we go. Promise that's not a problem. If you think consistently, go then WhatsApp me, American number, Chanda, we'll see, whatever. The very best of luck. I don't like spam, ladies and gentlemen, but I'm here to help. Anybody wants to help, please stick it in here. Who's still here? Not many of you. Right, let's say so. I'm going to wrap up if nobody else has got some contribution. Let's have a look at yen. Another key pair. 109 is a key psychological level. We've been pivoting through it this week. Again, this is dollar yen on the 1 hour time frame. If we go up to the higher end of day time frame, again, all of May and most of the half of April, 109 is key. We've just been rotating through it, really. Not a lot of action, both receiving bids, both receiving pressure, but the trend sort of still edging to downside for dollar yen. Not a great deal, waiting for the breakout. Cable, on the other hand, sterling, another daily, another new high over this 140, 165 area, which takes us back to this zone here towards the end of February again. And that intraday high, I thought I'd marked it on here, in February, it took us to 142.40, so 142.40, 142.45 to the upside. So again, on a daily basis, you can see cable still bids, had a good May, still a full week and a day to go for May to the upside. So then the story of the weaker dollar runs out. CAD we looked at earlier, bounced off 120.25 after the Canadian data. Aussie we looked at, gold we've looked at, Bitcoin we looked at, and Swiss. Anybody want to look at Swiss or anything else? Any other assets anybody wants to look at? Other than that, I'll wrap up. I've got a little note I want to write about gold, actually, before the day's out. So have a look at our website for that later on. So I'm just going to wrap up. Alicia, it'd be good to touch base with you, my friend, and see what's what. where you are, who you trade with, all that sort of good stuff. Yeah, 120.12 there. CAD, euro. Let's finish with the dollar index because it's been very, very much in focus, as we said. So again, another spike lower. Interestingly, we've created a new low here. This is 1 hour. So earlier we spiked to 89.61 today. So it's 4 hour. Yeah, 89.61. So it's below these lows and a new low for May. So dollar index early today, Friday, 21st of May, new low for May, new low for April, new low for since hang on, what's this? 4 hours. 4 hours. Sorry, I'll get this right. So where are we going? Yep. So we tested again this February low. As I say, this 89.14 was our 2021 low. So it's much closer to that than it is the 21 high over here at 93.50. So another one that's trending lower as the pressure sits on the dollar. So if there's no more queries or questions about anything at all, I'll let you go. Have a great Friday. As I say, US PMIs in about 30 minutes, so watch those. Services expect to come in at 64. Manufacturing at 60. EU consumer confidence 15 minutes later at 1700 server time at -7. Then we've got existing home sales also at 1700 hours. 6.09 million existing home sales. Remember, homes have been pushing the US economy forward recently. They've got a bit of a part of the story of inflation that even with lumber prices at record highs, the housing market has picked up in the US. So obviously we've got the Baker Hughes rig count as well for oil traders, and the important CFTC futures readings. See how futures markets are positioned on the dollar in particular later on the close of, just before the close of the US market and the close of the markets for this week. So traders, take care. Have a good weekend. Stay safe, everyone, and we'll see you again soon. Okay, so all the very best.